In this series of Public Administration 101, we will focus on Municipal Standard Chart of Accounts, or otherwise known as mSCOA. So, what is mSCOA? mSCOA is a standardized accounting system that aims to change how municipalities transact by standardizing financial management processes through policy formulation, budgeting, financial reporting frameworks, and statements. With effect from the 1st of July 2017, municipalities are required to capture all their financial transactions against a predefined classification framework, which will result in uniformity of line items in terms of revenue, expenditure, assets, and liabilities. mSCOA is not just a budget/finance reform, it is a business reform affecting the entire municipality. mSCOA provides several mechanisms for strengthening accountability, facilitating budget reporting, as well as adding value to the budget process, to ultimately improve service delivery. The primary objective is therefore to achieve an acceptable uniformity, credibility, and quality from the collection of data. The mSCOA framework introduced 7 key segments, as well as 15 fundamental business processes, which, according to the framework, must be complied with to ensure the successful transitioning and implementation of the new framework. These 7 segments are: funding, function, item, region, classification, project, and costing. The funding segment focuses on the source of the funds to be used to procure a particular item. The function segment focuses on identifying which function or sub-function the item should be recorded. The item segment addresses the nature of the item to be procured or the nature of the transaction by classifying the transaction as either an asset, liability, revenue, capital, or operational expenditure. The region segment identifies the geographical area to which the benefit of such item would be derived. For example, which ward, department, or directorate will ultimately benefit from this transaction? Under the classification segment, a specific organizational vote or sub-vote to be used is identified to record the item or the transaction. The project segment, on the other hand, identifies whether such item or transaction would constitute an operational or capital project. Lastly, the costing segment identifies the impact of the item or transaction on the cost drivers, tariffs or tariffs formulations. As previously indicated, the mSCOA framework also introduced 15 fundamental business processes which must be complied with. And these are governance, budgeting, planning, and financial modeling, costing, and reporting, project accounting, financial accounting, grant management, treasury, and cash management. Under procurement, supply chain management, contract management, expenditure management, valuation role management, land use and building control management, real estate and resource management, asset life cycle as well as asset maintenance management, customer care, credit control, and debt collection, revenue management and receipt, revenue cycle, including meter reading, billing, and debtors. When properly implemented, mSCOA has the following benefits: an improvement of the quality and credibility of the data they provide, a deeper comparative analysis of each sector, alignment and uniform recording of transactions, alignment of reporting information, standardization of key business processes and account classification, improved accountability. This is another fundamental lesson in public administration, proudly brought to you by Kano Consultants. For professional advice you can trust. Like this video. And remember to subscribe to our channel for more content.